Hello and welcome back to the Geordie Pig Investor channel, where we delve into the world of dividend investing to help you build a portfolio that pays you. Whether you're just starting out or looking to maximize your passive income, this channel is your go-to resource for strategies, insights and the tools you need to grow your wealth steadily over time. Hit that subscribe button and join me as we explore how to make your money work for you, one dividend at a time. In today's video, I'll be going through the new tariffs policies put in place by President Trump. This isn't the first time Trump has implemented tariffs, as he did it back in 2018 to 2020, which mainly affected China, but also parts of Europe, Canada and Mexico, which seems to be who's also been affected this time round again. In today's video, I'll go through what the new tariffs are, the objectives behind them, who it's affecting most, and the impact it's going to have across the world and specifically with us in the United Kingdom. What are the key components of the new tariff? Well, first of all, Trump has implemented a global tariff. This is a flat 10% tariff imposed on imports from all countries that includes China, Canada, Mexico and Europe, and within this the United Kingdom is included. There's around 60 countries in total included here, and on top of this he has implemented some more specific tariffs, which are additional 25% tariffs on steel, aluminium, automotive and automotive parts, which all come into immediate effect from the 5th of April. There is also reciprocal tariffs ranging from 20 to 50% on countries that have trade surpluses with the US, subsidiary exports, manipulate currencies, or restrict US products. The UK unfortunately also falls under some of these categories. China has definitely been hit the hardest though, again, just like 5 years ago, as there are some China specific tariffs where certain categories now face 60% plus rates. What are the actual objectives behind the tariffs? Well, one of the main objectives behind the tariffs is to decrease the US trade deficit by discouraging imports. It is also to boost domestic manufacturing, so it encourages companies to produce goods within the US. There's also the revenue generation benefit for the US as well. By this, I mean the US can use the tariff revenues to fund tax cuts without increasing national debt. Essentially, it's all to benefit the people within America and of US citizenship. So what does it really mean for us over in the United Kingdom? Well, the impact on the UK is definitely not looking great to start off with. It'll definitely have an impact on the UK, and one negative impact being the new export challenges. The UK exports, particularly in automotive and manufacturing sectors, face increased costs due to US tariffs, which could massively cut profit margins or lead companies into bankruptcy. There is also the supply chain disruptions, as the potential delays and increased costs in transatlantic supply chains will have a huge knock-on effect. And finally, you will have the inflationary pressures. The possibility of higher priced imported goods will not only affect US but also now the UK consumers. It could really hurt the UK GDP growth for 2026 and beyond. Like I said earlier, the tariffs have only just come into play on the 5th of April, and with today being the 7th of April, that means it was only coming into play 2 days ago, so it really is early days with these tariffs, and we do have to see what the short-term impact is going to be. So we are going to just have to wait and see what that medium to long-term impact will be. And what's the UK's response been to these tariffs? Well, the UK's initial response was that Keir Starmer called the tariffs damaging to the UK-US relations and has requested sector-specific exemptions for automotive, whiskey and pharmaceuticals. They have decided to not put any sanctions on the US imports for the time being and will await to hear their response to his initial proposal. With all that being said, what can we do to combat the new tariffs so that they are less impactful? The first option is for businesses to explore diversification. By this, I mean exploring alternative markets to reduce resilience on US exports. They could also look at the supply chain itself and adjust supply chains to mitigate the tariff impacts. Or the one thing I think most businesses are hopeful of right now, with it still being so fresh, is engaging with policymakers to seek favourable trade terms and support. With it all being so suddenly implemented, it's tricky to know the medium to long term effects right now, but I don't doubt it's a horrible sort of limbo to be in as a business owner if you currently deal heavily over in the US. Having said this, what is the actual global reaction currently and potential trade wars with economic forecasts and concerns? With it being so fresh, it's hard to tell what direction things are heading, but with some countries, we definitely know what direction it is heading. Trump has hit a country like China so hard, and unsurprisingly, they have signalled intentions to impose counter tariffs straight right back at the US. There is trade fears of it escalating into a broader trade conflict, potentially leading to a global recession, but it is still early days. Economists are concerned about this though and have warned of potential global economic downturns due to escalating tariffs. Leading on from this, there has been a lot of market volatility since the announcement. We saw the S&P 500 have its biggest singular day drop since COVID, and over 5 trillion was wiped out the stock markets, showing the crazy impact it has already had. There is no doubt it's going to have an impact on the consumers as well as the anticipated rise in priced goods worldwide, affecting purchasing power. One company that seems to have already been impacted by these tariffs put in place by the US is Jaguar Land Rover. This is a great example to talk about because with them being hit with the tariff complications from the get-go, they have temporarily halted all vehicle exports to the US to assess financial impacts. They are already making market strategy adjustments by exploring price increases for US consumers and looking to focus on other markets. As of right now, there are no immediate plans for job cuts despite revenue concerns. That's not to say though that in the near future there will be job cuts, and it just shows these tariffs are already having big impacts across the globe and even in the UK right now, and it's definitely going to have an even bigger impact in the medium to longer term. Very worrying signs for particular companies and for people who do work for companies that obviously have a lot of jobs over in America that are UK based or even European based, because like I say, your job is just certainly not secure now, as these type of tariffs could send companies into bankruptcy. And what does it all really mean? Well, President Trump's 2025 tariff policy, unveiled on the 2nd of April, represents a significant shift in US trade strategy, aiming to revitalize domestic manufacturing by imposing a 10% baseline tariff on all imports, with additional reciprocal tariffs targeting approximately 60 countries. In conclusion, while the 2025 tariffs aim to rejuvenate US manufacturing and reduce trade deficits, they have introduced significant economic and political challenges. The policy's success will depend on its ability to balance domestic economic growth with the preservation of international trade relations and global economic stability. We have already seen poor market reaction and just have to hope that the impact on us in the UK isn't going to be a great one. What are your thoughts on these recent tariffs put in place by President Trump? I'm certainly not surprised by them, but they have had a bigger impact on the market than I initially had thought. Let me know your thoughts in the comment section down below. Thanks for watching this different type of video today. I hope that you have been able to clarify a few things in relation to these new US tariffs, and if you enjoyed today's video, then let me know in the comment section down below. Until next time, keep compounding and stay patient in the market, especially when we have to navigate through these tricky Trump times. Anyways, for now, this is the Geordie Pig Investor, over and out.